Let me come now to Abubakar Suleiman, who is the Managing Director and Chief Executive Officer of Sterling Bank PLC. You are CEO of a bank, a big one at that matter. How has coronavirus changed the world, and has it changed it permanently?
I think we can all agree that the world has changed permanently. I think the debate now is the extent of the change. In other words, to what extent are we going to roll back some of the changes that we've seen, and which of them will accelerate further? What do I mean by that? We have argued, consistently argued, that we can achieve a lot of efficiency, at least in banking, if we migrated our customers to alternative channels, because we lack the infrastructure. We have issues with mobility, traffic, and therefore the cost of serving customers in branch was very expensive. And we have made this argument forever. The infrastructure exists, the solutions had been built, but the migration did not happen. People were stubbornly stuck to their ways of doing things until they had a lockdown and they were all compelled to function differently. And many of them realized that they were better off using this platform. So I don't imagine that those people will go back to making the long trip to the branches. I have also pioneered working remotely for a long time now. Over the last 2.5 years, we've worked with flexible workplace and flexible work time. And just a month before the crisis, we introduced a 4-day work week, just as a trial. And the reason we did this was we wanted to demonstrate that people could work different hours, work away from the office and achieve the same objective. So we believe this, but the virus and the pandemic has compelled us to experiment, and there is no going back in that. The bigger question, though, is at a global level, are we going to get back to a point where international travels, for instance, would return to what it used to be? Are we going to see tourism return to what it used to be? Is the demand for commodities, specifically oil and gas, is it ever going to go back to what it was? My suspicion is that a lot of this will never return again. I don't imagine, for instance, that between Boeing and Airbus, they will sell 2,000 aircraft year on year for the next decade. Chances are that the next year and a half or 2 years, they might not even sell half of that. So these are major changes that the world has to be ready for. So no, the world is not going to return to what it used to be, but there are other indirect outcomes of this pandemic that could even be more damaging. So for instance, on the back of this pandemic, the crisis between the US and China has escalated. And part of that is a total disruption of the trade, international trade as we know it. What we might see here, as some people have termed it, deglobalization. But what I see is a decoupling of the economies if we're not careful. And that decoupling has significant consequences for China, because if they can no longer be the factory of the world, how do they maintain the kind of growth that they have done historically? On the other side, on the Western front, how does the quality of life, how can they continue with the quality of life that was enabled by cheap output from China if they start to decouple and localize production? So these are significant consequences. And of course, if we then see a global economy that sort of slows down on the back of these two events, what does it mean for the demand for commodities? Does it mean that the $20, $25 oil price has become a reality? If it does become a reality, what does it then mean for demand from Africa and from other commodity exporting countries? So I think that the consequences of the virus goes beyond the virus. And I know with certainty that we will never go back to what the world has used to be.
Just quickly take a look at what Stanike mentioned just a few seconds ago. As a CEO, what are the hardest decisions that a CEO has to make right now in this new normal, post-COVID-19? Salient points he raised there. What is the future of funding, for example? If I come to Sterling, for example, in this new normal, presenting some kind of proposals in this new normal, are you going to be understanding me? So what are the kind of hard decisions that you should be faced with? For example, if also a client, a big client of yours comes in with a fever, would you tell the big client to go back? What are your, what are the things you're going to be looking at right now? Should I be sending my employees traveling? Should they be going marketing? How should my employees return back to their desk? So I wonder the kind of decisions you'll be making right now where you are.
Thank you very much. If my wife walks into my study with a fever, I'll ask her to go back to her room. So I don't think there's any client that is big enough not to be asked to isolate if they have, if we suspect that they might be infected. This is about life, so we're not negotiating this, and it's just the right thing to do. Luckily for me, I have quite a few entrepreneurs right here, so it's a good time to have a conversation around funding. We make one really, really huge mistake. We think that the bank are set up to fund venture capital, entrepreneurship. So when we have an idea, we go to a bank. It's wrong. It doesn't work like that. Banks are specifically set up not to fund that kind of idea. That's just the truth of it. And I've been explaining this to young people over and over again. Here's why I say that. The money that the banks have has just been placed there by you, and you want it in 30 days or in 60 days or 90 days, period. That's the purpose of that money. So I can only give it to someone who has a business that has the capacity to return that money in that time frame. And it's so important for young people to understand that. Now, the reason they run to the banks is that we have a significant defect in our capital structure as a country. Most countries have accumulated capital over a long period of time. The last 200 to 300 years, the capital that would have accrued as a country was stolen, was taken away from the continent, period. Whether it is in terms of our traditional wealth or it is in terms of our natural resources. And so these things was taken away from us. So we have no savings, no capital. The families today, the average family today in Nigeria cannot boast of $1 million in capital that they can then use to fund the younger people to have a startup. We need to deal with that. It's a fact that we keep ignoring. It's not going to go away. That said, it doesn't mean that we should not reconfigure our own banking system to start to tackle some of those problems. And we've seen the central bank of recent through some form of intervention fund, which even though they are debt, they are longer term debt, they have the characteristics of quasi-equity, and therefore they can enable people who are just getting started. We at Sterling Bank, for instance, went through the pain of 4 years to get license to offer non-interest banking, because that offers funding that has some of the characteristics of equity. So again, for an entrepreneur, you need to understand what exists so that you don't take the wrong things. Think about it. Which of the major technology companies that we talked about globally was funded through bank debt? None of them. The bank could not have funded it. If they funded it, it would be through the wealth management side, where they have money that has been set aside for equity investment. So I hope and pray that the entrepreneurs on board, so that they take this lesson, they will improve their chances of succeeding. The second challenge we face as financial institutions is that we never took care of the problem of identity. So for a long time as a country, you couldn't look at someone and say, this is uniquely Mr. Leo, and therefore if I talk to him, he's the only person. Somebody else will come with his passport on an international passport bearing the same name. These are problems that you need to solve as a country, because it's the foundation for trust, is identity. Luckily for us, again, we've made significant progress with the BVN, which is beginning to create unique identity for individuals. So what am I saying? There are standard infrastructure that needs to exist for financial services to solve the problem of intermediation and for providing capital. That said, I believe that your question is bigger than that. What does the future look like on the back of COVID? How do I continue to provide funding or financing for my clients and for new clients? The reality is that the gaps that made it difficult for us to lend and get our money back before, this is the time for the government to take a very strong stance. Some of them are simple. So for instance, if people take money and they refuse to pay back, we don't have bankruptcy procedure. That means that they at least have to give up whatever they're holding on to. So you could take money from a bank, refuse to pay back, and continue to live a good life. And if you go through the court, it takes an average of 8 years for a collateral that has been properly documented to be converted to cash. So these are policy issues, infrastructure issues that need to happen. That said, obviously, for as long as government offers the window for banks to lend to government, which is risk-free, it is tax-free, and the return is significantly high, the motivation to lend to commercial entities is lower. It's just natural human behavior. People playing safe. Luckily, that gap is opening up now. If you take risk and you lend to commercial entity, your returns are way higher now than the current treasury bill rates. So yes, if a big client of mine came into the building with a fever, I will turn him back dutifully. And I would recommend that they consider taking a test to be sure that they are not infected.
Okay, let me come to Abubakar Suleiman, the Chief Executive Officer of Sterling Bank PLC. You mentioned earlier on deglobalization, and I'm coming to it right now because it's also something that we need to take into consideration looking at the new normal and post-COVID. What would you do with the deglobalization stories around the world right now? We're still battling with the pandemic pain. US, China are still having their tensions. There's Brexit also, we shouldn't forget that. There is AFTA, that's the African Continental Free Trade Area. You know, so how do you put all of this together with President Trump also canvassing for America First, nationalistic point of view? How do we invest all those stories in this new normal?
When you are in a game and you're losing, half time is a great time for you. That's the way I think of Nigeria. We're not doing very well. Now we have an opportunity for a reset. We need to take advantage of that reset. We need to come out of the dressing room smoking. And what do I mean by that? Deglobalization offers two sets of opportunities, or decoupling, which is what I prefer at this point. The first part of it is that, similar to the Cold War, you're going to have the two different axes trying to exert influence. And that is because China would like to continue to be a strong partner to Africa, and the West would also like to fight back on that. So that gives you an opportunity to begin to negotiate some opportunities for the country. The other thing that comes out of deglobalization is that the idea of localizing critical infrastructure and critical output is now becoming normal. So if you set out to say, I want to grow the pharmaceutical industry to take care of the drugs requirement for Nigeria, it becomes fairly acceptable. So you're no longer running against the grain, right? So for me, this is a unique opportunity, but we need to be, I guess, strategic in taking that opportunity. You cannot take an opportunity to grow an economy unless you understand how the economy works. I think the relationship between employers of labor and the government is broken. I think the most important thing that this country needs today is gainful employment, the kind of employment that makes it possible for people to pay for their own education and pay for healthcare and pay for food. And I think that that kind of employment is not going to be created by government. It's going to be created by entrepreneurs and people who run companies. Unfortunately, that relationship needs to be fixed. If we don't fix it, irrespective of the effort that the government put into creating infrastructure, people will not bring in their capital and their time to invest in Nigeria. Even Nigerians who have capital outside the country will not bring it back. So we need to fix that relationship. And that means we need to have a conversation about what the private sector needs to create jobs. And primarily, what is it that the private sector needs? It is not about paying taxes. I don't think anybody objects to paying taxes. I think I object to being stopped 30 times a day to have a conversation about paying money to government when the government is not taking care of basic security or it's not taking care of infrastructure that it should take care of. We need to first fix the process of taxation so that it is simple, it does not consume energy, it does not distract people from actually building what they need to be building. We also need to get to a point where we take a national view or a nationalistic view on certain sectors. Everybody has spoken about healthcare. 5 years ago, we came up and said there are 5 sectors that this country needs to fix. And it's the health sector, it's education, it's agriculture, renewable energy, and transport. And transport includes logistics and the process for moving goods from the rural area to the urban area and to the port. Unfortunately, none of that was done, and a single company couldn't do it. Now, every single one of them has now become critical. Transport is critical. If you look at what has happened at the ports over the last couple of years, that is a consequence of not investing in a transport system that works. We've looked at what happens with power. Obviously, we've seen the consequence of that. Healthcare is clear. So to my mind, deglobalization and decoupling is an opportunity for us to pick the sectors that are most critical to us and to rebuild the relationship with the entrepreneurs in those sectors so that the conversation that comes out of that process is one that can be implemented. If we cannot implement the policy that we're throwing out there, then we're not going to create jobs. If we cannot create jobs, we cannot fix security. Security is as much a problem about unemployment as it is about all the other issues that are thrown up. You cannot fix education without creating jobs. The government does not have enough resources to pay for all the levels of education that we need. But if we create jobs, then a lot of them can be paid for. And obviously, we can then pick up those who are not able to access education. So for me, take away one thing, let us think of this as a reset. Let us have real conversations with the entrepreneurs and the people who can create jobs. Let us give them the support that they need so that we can start to create jobs and start to localize or produce the things that we need.
I've also seen that banks and banking leaders have shown resilience in terms of continuity of banking services for their customers and clients. How do we move forward? And your concluding remarks in just 30 seconds, if you can.
Very quick one. Let me remind everybody that we cannot digitize what does not exist. So while technology is very good, it's only good when you've already built the infrastructure. And also, let us separate between technology infrastructure and the technology stack and the use of technology. A lot of what we've done is try to utilize technology that others have built. That could also become a risk factor as we move forward. Coming down to what can we do for our customers as banks, I think we need to move away from sitting down in our offices. We need to get involved in the sectors that we are interested in. I have set myself up to support customers across 5 critical sectors. I think all banks need to figure out the sector that interests them and move beyond just financial services to really understanding those sectors and supporting them. That said, at the end of the day, we must be prepared for a very hard landing. We must prepare for it. I don't think we have recognized the fact that things are not going to go back to normal, whether it is at the government level, it is